Hello, everyone. I've been getting some messages about liquidity. What is liquidity? How do we find out? How do we use it? Well, let's talk about it. Let's have a little chit chat. Why don't we? Okay. It's not as scary and daunting as you might think. Okay. So when I'm talking about liquidity, what am I talking about? Well, I'm mostly talking about stop losses. I'm talking about lots of stop losses. So you as JP Morgan Chase, you're this gigantic bank that's trading, that's filling gigantic orders on a daily basis. There's only so much liquidity out there in the market, right? So you need to create your own liquidity. You're going to have to take it from somewhere. So how do you do that? Well, you stop out other banks, other traders, etc. And where are you going to get the most liquidity? Well, you're going to get it in the places where there's stop losses stacked, right? Because us as humans, we do the same stuff. We trade similar ways. We've read the same trading books. We have the same emotions, fear and greed, at similar times, right? So we're a little bit predictable as humans, right? Because all this is a chart of human emotion, pretty much. Greed, fear, all that stuff. So traders love to trade. They just love it. Support and resistance, supply and demand, right? So let's say, for instance, um, prices prices coming down. We get some nice area of support. People are like, ooh, support. Price starts going. They're like, great, yeah, I'm long. This is great. I have this whole area of support behind me. It's so strong. It's great. What's probably going to happen is, well, first of all, there's probably a downtrend, but we'll forget about that. Price is going to come down, rinse out all the people that got long anywhere in here that put their stop loss below here, and then rip, right? You're in some uptrend. Price starts consolidating, accumulation, whatever, starts ripping. Anyone who got long either here or anywhere in here is likely going to put their stop loss under that area. What's price going to do? Likely going to come down here and then rip. You know, this is kind of what we're talking about. So if you're aware that this might happen, you might be able to keep yourself out of a little bit of trouble. Okay. Um, and I should touch on kind of in order to make markets move um, hard, fast, the things that you want as a trader, right? You need fuel. And the fuel is liquidity. Okay. So prices coming up, we get some consolidation. What's going on here is a battle. There's a battle between people that are shorting because they think it's going to go down. There's a battle between them and the people that are longing, thinking this is going to continue, right? And when does the move happen? Well, the move happens when the elephant tips the scale, so to speak. The people shorting lose the battle, and the people that are buy stopping longs on this break at the same time as people starting to stop out, that fuels the market higher. Because if you're stopping out of your position, you're probably taking like a one tick loss, right? Which is going to bump the price a little higher. And then someone's getting in, getting long, and it's bumping the price a little higher because they're marketing in and they're slapping the ask, right? And it just creates these aggressive moves. And again, yeah, price might come down here, take out the people that longed that, and then really rip it. So where the good moves happen is where people are fooled. People are tricked into taking the other side of the trade, right? Let's kind of talk about some examples here. You can use areas of support, resistance. You could use wicks. They all have areas of liquidity, right? And it doesn't have to be an hour. It doesn't have to be a daily chart. It can be a 1 minute, a 5 minute. It's all the same stuff, right? So for instance, we had this big old drop. People start buying, piling in, right? They see price moving up to like, this is so great. Oh, I'm having such a great time. I'm long. What ends up happening is all these points are liquidity points, right? This is right here. That is this support area. This is, so then once the fuel starts igniting, the liquidity waterfall starts. That's where a nice move starts happening, right? And that's when we can kind of switch directions, right? So now we're in a downtrend. You can look for wicks, right? Resistance, whatever you want. Some people are trailing their shorts at these points. Here, here, right here, right here. What happens? Price gravitates to these areas where all these stops are. Wicks just above, just wicks above, and then dumps, right? These are the moves that you want as a trader. You're looking for this shit, right? So you can mark your areas of liquidity, use some kind of confirmation like a, trend break, whatever you use, I don't care. Because what also is in here? Well, people were longing this. They saw this battle. They thought it was going to reverse, So they started longing it with their stops under here, stops under here, stop under here, stop, stop, stop. You stop out one guy, he bumps into the next, and then you get the waterfall, right? Because in order to get out of these longs, they're slapping the bid to get the heck out, right? At the same time that somebody's shorting, so it's just a slippery slope, right? Happens everywhere. It's all in here. Like, someone shorting here, they have a stop above here. Well, wick him out and drop it. Oh, okay, I'll put my stop above here. Well, wick you out and drop it, right? There's some area of resistance here. Somebody thinks their short's protected. Well, no, price comes just above, wicks him out, gets absorbed, and drops. And why did this drop so hard? Well, other people were longing in here, thinking this was going to reverse. And so then there ends up being this big old cloud of liquidity sitting in here. And guess where price moves quick through? Where all those people get stopped out, right? And it's even so, something like this, like this is a supply zone. It's in an uptrend, so really you shouldn't be taking it, but it doesn't matter. It happens in downtrends too all the time. Okay, I got my supply zone. Price is in here. I think it's going to reverse and go down. Price rejects. Okay, I'm short because my supply zone strategy. It starts dropping. Well, wicks you out. Okay, dang it. Oh, now it's going to drop. Well, you get short again. So now everyone's short again because of the supply zone. They just barely wicked everyone out, and then it just rips, right? Because they tricked everybody into getting short right here. And what did that give them? Well, it gave them stop losses all above here to give them fuel to push price higher to continue the trend, right? So I always recommend trade with the trend and to look for areas of liquidity underneath these wicks. Say you were long. You thought that your stop was protected here. Well, no, it's not. It stopped you out, ripped it. Oh, okay, now it's right here. Well, no, stopped you out, ripped it, right? So this is kind of what I mean by liquidity. So that's any kind of support, resistance, a pivot, and then it's trend lines. Listen, people say trend lines don't work because they're not applying them to the right context of the market. They're not using them properly. Why would taking this trend line break work? Well, it's because A, for starters, we're going with the trend, right? And secondly, what is this trend line? This trend line is liquidity. All these are stop losses above this. Above all these wicks are stop losses. So there's just a cloud of liquidity here. People are fooled into thinking they're shorting this like top of the market move that's going to then dump. And that's what gives the market fuel to push higher when the scales are tipped, when the sellers lose the battle here, right? I hope that's helpful. And if it's not, just shoot me some questions. But that's kind of what I mean by being aware of where liquidity is and utilizing it to your advantage. All right, thanks.